Let's get your broad view of the market sentiment, the market mood at this point in time. On the one hand, we've had the earnings season in America very much in focus, of course in Europe as well. Top line numbers coming down there. We've of course also had the Federal Reserve in focus this week. Stimulus, is it on, is it off? Your views on how the market is reacting to all of this?
I think we've seen a lot of uncertainty in the markets. Obviously, there's no individual strong trends that we're seeing. Bearing in mind that we look at two components of the market, being the ratings or the P multiples, and then obviously the actual earnings. I think multiples in general are fairly low. So global P multiples across the board, especially in developed markets, fairly low. There's been a lot of exiting out of developed markets and focus into emerging markets. So on a sort of global basis, we probably would favor developed market equities over some of the emerging market stuff. But having said that, we are seeing revisions downwards in terms of earnings expectations. So forward P's might actually be under pressure and be coming down or going up as earnings numbers are coming down as well.
Now, Abdul, we always talk about this Bernanke factor and the influence he has on the markets. Is there such a thing as a Mandela factor? Does he have any influence on the markets? Because, of course, the market is green across the board right now.
I think so. I think the market is looking for some direction. Obviously, you had the testimony yesterday, sort of hinting that they'll do everything in their power, but not announcing a QE3. What is quite ironic is that every time we've had a stimulus QE1, QE2, the market has gone higher, but initially, but then drifted lower. And the lower lows are typically lower than the previous low, if that makes sense.
Yeah.
But effectively, what that means is that it is very short-lived. And I think, to their credit, the US Federal Reserve, they're realizing that as well. So they know that any stimulus might be short-lived, and it doesn't really alleviate the problems that we have, both in the US and in some of the developed markets as well.
Let's focus in on some of the individual stocks today. BHP Billiton very much in focus. That quarterly report coming out. Looking at that iron ore output, up by 15%, where we had Rio Tinto reporting a flat output for the quarter. Overall, though, do you like the growth numbers that we're seeing coming through from the world's largest miner?
Definitely. I think the production numbers were very strong, very healthy. Iron ore is obviously the big earnings contributor, contributing almost 50% of their earnings, or more than 50% of earnings. And we have seen the pricing of iron ore coming down. I mean, it peaked at over $170. It's now trading below $140 currently per ton. So clearly, with the increase in volumes that we're seeing from Billiton, more than likely the earnings will hold up much better than some of the competitors in that space. Bearing in mind their cost of production are significantly lower compared to some of the other global peers, but also they've got almost the location advantage, Australia obviously being much closer to China compared to, say, Brazil. So I think in a world where iron ore volumes are under pressure, BHP Billiton will probably be last man standing, and they'll continue to have earnings resilience in the face of fairly weak iron ore sort of profits in the future. Sorry, I don't know if you want to ask a question. Yeah,
no. I'm following you on that front. So what does that mean for the price action? Because Macquarie raising the price target to 300 Rand yesterday. Any views on recovery in this stock price? We're seeing it ticking up slightly right now, but your views on when we're going to see a substantial upside momentum on the stock?
I think we're currently trading at about 6.5 or less than 7 times earnings. It's not pricing in a lot of that growth. So even in a scenario where we see commodity prices being fairly weak and coming down from the elevated levels, given the volume growth and given the gyrations that we're likely to see in terms of market shares and relative market shares, as I said, Billiton will probably continue to increase their market share in a potentially stagnant or shrinking market for most of their commodities, given that they're typically tier 1 in terms of their profile. So in that scenario, I don't think that the share is overly expensive, and obviously it has been coming under pressure as most commodity stocks have been. So from the current rating point of view, I think it's obviously offering value. Also from a dividend point of view, they've got the progressive dividend policy. The yield is fairly attractive. So it's not expensive at all.
Let's switch to the sugar sector, because Illovo came out with an update saying that sugarcane crop is expected to reach a record this season. The stock reacted well to the news. Also news of increasing production capacity for potable alcohol. That's in Tanzania, looking to diversify across Africa. Do you like Illovo? Do you like the valuation on the stock at this point?
Yeah. Illovo has had quite a strong run over the last couple of weeks and even a couple of months. I think it's trading at about 28 Rand currently or thereabouts. Clearly, in terms of the production numbers that we've seen, they had the chairman's statement today. The 300,000 tons that you mentioned represents about a 20% increase on last year's numbers. Bearing in mind, South Africa just came out of the worst drought in more than a decade. So clearly, and especially relative to Tonga, they've actually lost market share in South Africa. So a lot of that growth is coming from a recovery in South Africa. I think something from 400,000 tons to over 600,000 tons. And that's something that we've always anticipated. I think the profitability, though, will be quite strong, given the high fixed cost nature of the sugar industry. So the excess or the increase in production volumes will have a magnified impact on profitability growth. And also, in addition, as you've rightly said, the African portfolio is quite attractive, it's quite exciting, and these incremental add-ons, for example, the downstream products that you mentioned previously, will add significantly to profitability because your cost base is fairly fixed in those scenarios as well.
Abdul, great to have you with us today. Thanks so much for joining us. Abdul Davids, Head of Research at Kagiso Asset Managers.